Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, look at what the market has done. Now, down only 0.5% now on the Bank Nifty and only down about 0.6% on the Nifty. And a lot of stocks are now seeing surge. Just pull out the intraday chart of Aurobindo Pharma, for example. That stock, all of a sudden, out of nowhere, has made a big move. Just see that the chart on Aurobindo, that one right now. In fact, entire pharma pack making a move. Sun Pharma as well, up quite a bit, and of course HDFC Bank has been leading for the bulls today.
Yeah.
That one's making a bit of a move to the high point of the day, Surabhi, right now.
Well, I guess that's the way it's playing out. I don't know, Anuj, we're back at 10,700 now. It hasn't punched through that 650 mark either. So, and where does this market leave us? I mean, still range bound?
Yeah, exactly. You know, as we discussed at the start of the show, is it a breakdown? We don't know yet. Let's see the evidence, because essentially the market's gone through this range. I think 2 weeks back we were talking about whether it was breaking out on the upside.
Yeah.
It didn't do that. Now the breakdown is also failing. So for now the range stands, Surabhi, 10,650 to 10,900. I think the Bank Nifty is really strong. I just see the intraday chart on that one, and today I'm sure it would have trapped a lot of people on the wrong side. If you see the intraday chart on the Nifty Bank, that one now cutting its losses quite a bit. Ashwani and Prakash with us for BTST calls. So Ashwani, the verdict would be again we're back into basically range. And what about calls now for index and individual stocks?
I have some more bad news. This can happen for another 6 months. So, at extremes you have to buy. This is no follow through. Write that and put on your table, because each time the market does a bit of an expansion and people get on board that this is a trending market, I don't think it is. And if you have a whiff of positive news, tomorrow will be a further short covering, given expiry, etc. And maybe US market does something different. So keep all of that in mind. I don't think you need to carry anything. Go home by 320, square off everything, and take a fresh view tomorrow. Meanwhile, Tech Mahindra is a buy with a stop of 700, target of 735. Dabur is a buy with a stop of 387, target of 410. And United Breweries a sell with a stop of 1160, target of 1120. Just one more stock, Voltas, it appears, seems to have made some sort of a bottom. And whatever happens with the AC sales, etc., it could head to the upper end of its range. So these are the kind of stocks that you should be buying today.
Absolutely. I take that point, Ashwani. Voltas, Anuj, even I found it curious. Of course, it's a different pedigree stock as well. But hearing Blue Star's commentary today, they were sounding so bearish, saying that the rains in April, May, they wiped out pretty much Q1, going to the extent of saying this is going to be maybe a very lackluster year as a whole. So that kind of commentary and then getting this kind of a move. But I think, Voltas is moving to its own beat.
Yeah, it is. But, it's corrected so much. Most of these stocks have Surabhi. And, essentially it's a Tata Group stock. And yesterday I think some shorts got created because of that news that perhaps promoters are going to sell. Which, I mean, even if it happens, promoter stake sale in Tata Group company is a completely different compared to others. The best example is TCS. TCS, after that big stake sale that happened from promoters, Tata Group, Tata Sons selling, rallied 20% after that. The largest Indian stock that we have listed right now, the block deal adjusted for the bonus happened at 1500. The stock's at 1862 now. So I think that is one trust that the market has with Tata Group. That's a fact, and that also explains why at lower level most of the Tata Group stocks see buying, especially the domestic stocks. That could be the reason, Surabhi. I mean, also valuation play, but the market has also recovered. Let's not forget that.
Oh yeah, absolutely. And Voltas is in step with that. Prakash, let's get your trades as well.
Well, it looks like it did break 10,700 momentarily, but somehow it's closed there. Now, if it starts to trade tomorrow below 10,700, maybe we can see some more 50 to 60 points downside is a possibility. Banks relatively is better off compared to relatively bounced from a very strong support of 26,300. So I think we can see some up move in bank, but let's still be my trading range. I would like to carry two shorts. One is Excite. Looks like you can see a slide to around 240 zones, stop about 252. And Infosys also looks like a short, can see a slide to around 1255 zones, stop about 1275.
Okay, talking about market bouncing back, look at the stock that's once again making a bit of a move. Bajaj Finance, just pull out the intraday chart of Bajaj Finance, because through the day it was, seeing decline in line with the market. But post 3 p.m. there's a big move that's taking place right now on that stock. Deepan, I wanted your thoughts on this space and Bajaj Finance in particular. After the kind of run that we have seen this year, a lot of money has gone into expensive stocks, in basically portfolio preservation kind of stocks. You reckon there could be some more money which could flow into some of these stocks?
I think so long as the numbers are coming through, I think that's just building confidence in these companies. I mean, you saw the way Bajaj Finance has moved since its Q4 numbers and positive management commentary, and the story kind of got repeated in Jubilant FoodWorks as well as Titan. So wherever and Page Industries also comes to mind. So I think investors are prepared to pay a higher valuation so long as they see visibility, they see superior growth, good quality balance sheet, excellent corporate governance standards. I think those are the parameters. If these parameters are kind of fulfilled, then investors are prepared to wait out for a long period of time, and they do that by buying high PE stocks. So this trend could continue, I think, for some more time or so. At the same time, one should also consider that incremental flows coming into portfolios, be it portfolio managers or mutual fund schemes, are getting deployed in existing holdings, and a lot of these holdings are the favorites of a lot of portfolio managers as well as mutual fund managers. So that kind of additional fund flow also benefiting these companies. At the same time, there's a scarcity value for such companies, considering they don't dilute capital and have been rewarding shareholders, so they have a very loyal shareholder base as well. And these are the factors, I think, which are keeping these stocks at such high valuations and still moving up and scaling to new highs when the rest of the market is just kind of crumbling.
Okay, all right, gentlemen. Stay on. We will get some more views in now. Earlier in the day, we caught up with a keen India observer, Teresa Barger, co-founder and CEO of Kartika Management. We got her sense on the Indian stock market and, of course, the kind of themes they like in India at the moment.
I think we still like where our portfolio is, even though this has been one of the craziest quarters that we've really ever experienced. The news flow has just been torrential. But in India, for example, speaking of the banks, we have seen high-quality governance banks like HDFC and RBL, which is in our portfolio, break away from ICICI, Access Bank, and those that are having corporate governance problems, either because there's a scandal or there's no succession planning, which is a real failure of corporate governance. So we still like that. As you know, famously, we're in a very expensive company in India called Page. And we've just done an analysis of Page because a lot of our investors say, how can you be in a company with 50, 60 times PE? So we used a Modigliani-Miller intrinsic value formula for that very expensive company. And when you look at it, in terms of its ability to reinvest at high ROICs over a long period of competitive advantage, which is what you get when you put things into this model, those are the kinds of companies that get favored. And the intrinsic value, when you look at what's called commodity value and franchise value, according to Modigliani and Miller, you get a stock which, believe it or not, hold on to your seatbelts, could be valued as much as 90 times PE. So we do have to look at new ways of looking at companies in some of our India names, but it's still a name we like very much. So we are, strangely enough, even though India has faced depreciation and nervousness about elections, it still is somewhat insulated from the trade turmoil.
Teresa, in that case, will you expand this list of 5? I mean, I still don't find Bajaj Finance or the Bajaj twins in that.
Well, you know, we are somewhat constrained that we're only in small and mid cap, and so we're not going to be in every name. We do rotate very slowly. We usually have long-term relationships with the companies we're in. So right now, you know, we have rotated a little bit from your list that you can't see there, but we are pretty happy with the portfolio globally that we have of about 22 stocks.
The other stock which has made a lot of money for you has been Eicher Motors, but over the last 2 years or so, it's gone a bit sideways. You think it's now fully pricing in the big growth story, or is this just one of those phases and where it consolidates and then will again sort of break out?
Well, I think it still has legs. I think that when their backlog got less impressive, investors turned off a little bit, but that's because they built new capacity. They also moved their engineering to the UK, and for the long run, I think that was probably a reasonable decision to make. And in the future, it really will depend on them being able to go from 600,000 to 700,000 to 800,000 bikes, and to also open up the export markets, not even dramatically, but just reasonably. They are kind of a cool brand outside India as well, because they're so niche. If they become a little more mainstream, we'll see what happens. But also the price point is very low internationally. So I think that they definitely could have some legs there, and they've got the capacity to continue producing at very good margins. I think that's really where they stand out.
What about IT companies? That's the other segment that's, especially in the mid-cap space, the way NIIT or Hexaware have done year to date, rising about between 25 and 50%. Is that a space that at least you will look at?
We have looked at it in the past, and some of the teams there are very impressive. But the issue is, of course, they become more competitive with devaluation, and that's good as a hedge, but it also makes them a little bit volatile because they do better and worse depending on the currency. So while sometimes you might like the hedge, I think the real long-term issue is whether they can stay ahead of all of the developments that are coming out of Silicon Valley. They've got to be really top-notch on artificial intelligence, on big data, on data mining, and that's our concern, is how far how their product essentially gets commoditized, because it's very difficult to stay on the cutting edge.
$10,656. So, well, Anuj, there is a fair amount of volatility for what it's worth. We were just talking about whether this is kind of equalizing and we're at 10,700, but this is a second dip that's kind of come through again.
And out of nowhere.
And suddenly,
Surabhi. So, this is quite interesting because, again, the bank Nifty has not gone to the low point of the day, but the Nifty is going there. And just pull out some of these stocks where you've seen decline. Now, interesting, Dow futures down still about 150, 160 point. I think is this a case of market thinking that perhaps this time around we may not be as lucky as we were last time when the Dow futures were down so much, but overall the market still recovered.
HUL, I think you were asking for the stocks, Anuj. I think that's the one immediate drag that I could see on the screen.
I think ICICI Bank as well. That rally did not sustain on ICICI Bank. Just pull out that intraday move on ICICI Bank, and that right now is quite volatile. Ashwani, what do you make of this last 5-10 minute volatility? This stocks moving all around the place, especially stocks like ICICI Bank and even Hindustan Unilever.
See, the issue is now strong stocks are also falling. Even tech stocks are giving up their gains. So basically the market is heading lower, and that could be because of the macros, not as much because of Dow future, etc. But still, 700 is the top end of the band. For any reason, if we open, say, 40, 50 point gap up, now 10,700 becomes that zone where you try to take short positions again. But overall, today, I think other than an odd HDFC Bank or TCS barely, you don't have any sort of saving grace. So somewhere, throwing in the towel is happening on the downside.
Okay,
yes, it's happening now. We're getting back to the low of the day rather swiftly. In 10 minutes we've done that. That entire pullback has been sold into. Let's get an insight into dealing room chatter then. Nimesh is here with Trader Talk. Nimesh, tomorrow's expiry as well. What's been the feedback?
Hi, so maybe for the expiry, you might see a bit of a pullback. But at least from a mid-cap, small-cap point of view, it looks like there is now capitulation happening within the Indian investors as well. So that's a clear message coming in from the dealing desk that now there is panic setting in the mid-cap and small-cap, and now there is flight for safety. So that's clearly the one feedback. The other point is from an FII point of view, I've been saying this for a while now that there is this massive redemption pressures across the emerging market ETFs, and that's impacting the India flows as well. So there is really no leg which is supporting this market. Yes, there is a DIF flow which largely flows into the large cap names, so that still continues. But it's the mid cap and small cap which is really seeing the brunt today, and now there is a sense of panic. Look at the individual stocks in the non-index stocks and the mid cap and small cap. They are down 10, 12, 15%, and that one low volume. So clearly there is now there is lack of buying. Nobody wants to buy at these levels, and now there is panic on the sell side. So that's clearly playing out. Again, it's a flight of safety. So maybe some bit of buying is back into large cap IT names or the pharma names. But again, it's very, 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 very small from a domestic point of view. The FIs on the sell side. Now there is panic on the mid cap and small cap from the retail HNI category. The only positive part is in the mid cap and small cap, we still haven't heard mutual funds having redemption pressures. If that has to happen, probably you'll see further pain in the mid cap and small cap. So that's a clear warning sign as far as the mid cap is concerned. But broadly from market's point of view, I guess for the expiry tomorrow, you might see a bit of a pullback. But the trend looks like it's on the downside, and there is now panic clearly in the mid cap and small cap.
All right, thanks, Amish, very much for that. Let's pull up some of the stocks. Worth looking at the sort of selling on both RIL and State Bank of India. We were just discussing RIL with Ashwani. I mean, the buyers are not queuing up, at least not today. I mean, the stock is pretty much at the lows, and there's consistent selling on SBI. You'll find a similar chart there as well. Again, lows of the day on that stock. And HDFC has turned a little volatile as well. So there's some red on HDFC. Even HDFC Bank is actually off the highest levels of the day. HDFC is the other one. You can see it's making the lows. So some of these stocks are really breaking the markets back for the time being. Sudeep, let me get your sense on, one stock that I keep hearing a lot of fundamental experts give thumbs up to, and that's Titan. Nonetheless, the stock has kind of fallen off the radar. That almost 1,000 rupee high that it hit immediately after the PC Jewelers episode. It's not quite managed to go back there.
Well, Surbhi, it's a great stock. It's a great business. And there is absolutely no doubt that they have a huge advantage over pretty much all the other jewelers and all other jewelry retail outlets. So I think it's a good stock to own, but I think at 1,000 and that kind of level, the valuation was looking a bit stretched. And that's why I think we haven't seen much of a follow-up buying at those levels. But having said that, at current levels, I think it's looking good. Whether one should go and start buying today or wait for a little bit of overall market correction for a few more days, I'm not sure. But I think there is absolutely no doubt that it's a good stock to have in your portfolio for a long-term investor.
Good stock to have in long-term portfolio. Sudeep, hi, good afternoon. What about a stock like, Adani Enterprises, down 12% right now, down 32% this year. It's not a year of high beta, of course.
Well, Anuj, I'll avoid stocks like Adani Enterprises at current, market scenario. I'm not talking about today. I'm talking about overall the global scenario, the way the trade flows are moving, the way the trade war is developing, the oil prices are moving. And of course, we have an election this year, central election. So I think things are a bit uncertain. At this stage, I don't think I will get into a volatile stock like Adani Enterprises. If I have to pick up some stock from the Adani group, I think I'll stick to Adani Port. It's a fantastic company, and I think it's got a great potential for a long-term investor. On dips, Adani Port is definitely a buy.
Okay, well, we'll take a break. Just take a look at UPL's intraday chart. Flag this stock in the morning, of course. That one right now making lows of the day. So a lot of stocks actually are moving lower. UPL down about 3.5%. We'll take a break and be back with market closing.
Welcome back. So looking at a decline of about 1% on the benchmark indices. The mid-cap index has pared its loss to an extent, but you're still looking at a drop of over 300 points. We are in conversation with the experts. Prakash, let me take up some stocks with you as well. These mid-cap IT plays, even on a day like today, are really flaring up. And some of them, I'll give you a specific example. Memphasis, let's pull up the intraday on that stock, 7% up as the buyers keep queuing in on this one. We were just discussing this with our alpha manager as well. So how do you look at it on the technicals?
I like the chart from a slightly longer term perspective. It's into a consolidation mode on a weekly time frame basis. On a daily form, it's a beautiful chart it's given after a consolidation and breakout. I think it's going up. Stop should be 1100, which is quite deep, 42 rupees stop. But I think it's going beyond 1200 to 1250 zones. It's a matter of time. I like the stock emphasis.
Okay, like the emphasis. 4 minutes left for markets to close. So Ashwani, that last hour volatility notwithstanding, what's the verdict for the day today? Still in a range, still not broken the lower end of the range, or do you think it's a matter of time, matter of when and not if?
You know, what is a range breakout? If it breaks out, goes to 10,000, that sort of range breakdown, chances are will not happen. From 10,700 to about 10,850 may become, say 10,550 to 10,700. So, a lot of time will be spent in these ranges without them meaning a whole lot. But I think mid caps is where they are going to go to the cleaners, because each time there's rate pressure, mid caps tend to underperform strongly. So every day you'll have some stocks up, some stocks down on large caps. Yeah. The 52-week high guys will come back and make new highs. But otherwise, I don't think this market is going 500 points lower on the Nifty or 500 points higher. We're basically going to remain in these narrow ranges. Okay, so that's the verdict from Ashwani's side. So Anuj, we are closing out. It's a 1% drop. I mean, it's not really earth-shattering, actually, if you see some of the global markets. But I guess for us, the question is that if this is actually going to lead to that breakout or not. Again, we're looking at the wrong index, because the Nifty and the Bank Nifty, HDFC Bank, masks a lot of things. Sometimes HDFC Bank moves, HDFC, Reliance here or there, they mask a lot of things. As we speak, the mid-cap index is down 4% for the month. The index is down 4% for the month. And from the top, it's down about some 15% thereabout. Now I think we're getting into that zone. Last year it rallied 48%. This year it's down, suppose, at 12%. Now, we're getting into the zone where 2-year CAGR would be interesting. That's something that you would start to look at. But I think the mid-cap butchering clearly is on, and that's going on. What this would lead to is, again, for a lot of retail, B group would become a bit of untouchable. You would rather want to be in the safety of A group. Let's talk about stocks that made a move today, of course. Look at the way oil marketing companies moved today. HP, BP, IOC. BP was down 9%, HPCL down 8%, and IOC was down 7%. And if you thought upstream would have survived, that's not the case either. GAIL is down 5.5%, UPL down about 3%, Larsen & Toubro down 3%, ICICI Bank down about 3%, SBI 2.5%, Tata Motors another 2.5% gone on that. Even the strong stock like Bajaj Finserv was down 2.5%. That wasn't spared. Reliance was down about 1.6%. Bajaj Finance was down 1.5%. Lever was down. ITC. On the way up, really, it was HDFC Bank with about 1% gain. That stock actually is very close to its all-time high. 5.47 lakh crores on market cap on HDFC Bank now. And of course, a couple of IT names like Tech Mahindra and HCL Tech did well. But really, the story was in mid-caps once again. I don't know where to begin, Anuj, really. It's a 300-point drop on the index. Look at individual stocks and look at big stocks in the way they have fallen today. Something like, for instance, I'll start off with the United Breweries. That was a short call given by Ashwani. 5% down on that stock. You've seen Raymond clip around 4.5% as well. Let's pull up Arvind. I saw Arvind also on the downside. India Cements has lost 4.5%. Then if I take more names, a lot of the Adani Group stocks are weak. Adani Enterprises, 12% cut on that stock. That's what we're talking about. A couple of the ADAG names like Reliance Communication, Infra, Power, most of those ADAG names were trading on the lower side, 6-7% down, depending on which stock you were picking up. IDBI Bank has lost about, 9.5% on IDBI Bank, by the way, today. CG Power down 8%.
PFC, REC have lost between 7 and 8% depending on which stock you're looking at. Jet Airways is down about 6%. These are big stocks I'm naming. I mean, I haven't even come to the tail enders like JP Associates, for instance. That stock lost about 10% in today's trading action. If I go on, then NBCC, we're talking about a decline of almost 9%. Some of the other names like Manali Petro are down about 9% as well. KRBL has fallen even more. Syndicate Bank is down 7%. Of course, all the oil marketing companies, as Anuj pointed out, they were anyway weak, and weak on big volumes. Meghmani Organics, Indiabulls Real Estate, GNFC, you can just go on. Adani Power 5%, Delta Corp 5%. Let's just safely say it's a really long list of losers out there. Arvind, as I mentioned, Philips Carbon, some of these high-flying name stocks that have done so well, down quite a bit as well. On the upside, I can really only pick out one trend, and that's IT. So whatever we saw on some of the large cap names, that continued in the mid cap as well. So Memphis is today's star. We're looking at almost a 6% surge, days high on that stock as the market was closing out. It had some company in the form of KPIT Tech, in the form of Cyient, about a 1% up move on a Hexaware as well, some buying on Mindtree. So mid-cap IT stood out. Dabur found takers, fresh 52-week high on that stock, about 2% on the upside. Godrej Consumer, same story, 1.5% up over there as well. Voltas was another name to look out for, 1% on the higher side. Havells, about 1%. But that's really about it. I mean, I can count the winners beyond mid-cap IT on my fingertips. Otherwise, it's a huge sea of red with some very deep cuts on Anuj on big stocks. I mean, a lot of they're actually in F&O, the ones that have fallen so much today.
Yeah, and the other big worry is, especially on the B group and below that, is that you won't have exit. A lot of mutual fund, PMS, holding stocks in the B group lower than that, where in 2017 it was good. Market was going up. You wanted a new idea almost every day or every week. And now, you try to sell stocks there. You see the market depth there. You'll see that there's a problem. If you want to sell some stocks, you can't sell the stocks without bringing the price down 5 to 6% on just your order. Forget about, selling large quantity. And that is going to be the other problem in the mid caps. Now, this is going to create opportunities. But for who and at what price? I think that's the bigger question, especially for those who would have raised cash and would be sitting on good stocks. This mid-cap correction, this mid-cap mayhem at some point will create really great value buying. But I think we still have some time to go for that.
Okay, let's get final thoughts from our experts as well. Ashwani, what's the advice, particularly on, okay, I don't think we have Ashwani with us, but I'm going to take this question with Sudeep, you. The way the mid-caps are falling, even the large mid-cap stocks like, Arvind, Jet Airways, the entire gamut, what would the advice be you for the next couple of weeks at least?
Well, I think, Survi, next couple of weeks, one should be extremely careful about mid-caps. It's a combination of global as well as domestic factors. Let's watch the market, not rush to buy fresh mid-cap stocks. What I recommend to the investor is to be very carefully keep watching the good large cap stocks. A stock like Reliance Industries, I think it's corrected quite a bit today. If there are further correction, I think it's very clearly a stock to buy for the future. Similarly, I would say one should keep an eye on Maruti and also ICICI Bank. Yes, it has corrected quite a bit. There were a whole lot of problems, but current levels, it's looking attractive. Don't go and buy today. Don't go buy tomorrow, but keep watching at an appropriate time for long-term buy these stocks.
Okay, fair enough. Gentlemen, thanks a lot for joining us and taking us through the market close. So, all in all, a rough day for the bulls with the Nifty down about 100 points, Sensex almost 300, but the bigger cut really is reserved for the mid caps and advanced decline, well, quite weak at about 1:6.
Absolutely. Well, we'll take a quick break on that note. When we come back, we will get you an exclusive conversation with Debjani Ghosh, the newly appointed president of NASSCOM, on their outlook for the IT sector for this year. Well, let's now get you that promised big exclusive. Earlier, Shireen caught up with Ashwani Gujral, the newly appointed president of IT body NASSCOM. She is the first woman president of NASSCOM in its 30-year existence. So let's hear out what Ms. Ghosh had to say about the way forward for the Indian IT sector.
I'm a strong believer that the opportunities ahead of this industry are it's just tremendous. It's game-changing. It can rewrite this entire industry. Now, of course, in order for us to leverage these opportunities, we have to transform. The status quo is not going to cut it. We have to transform. We have to reinvent. We have to disrupt ourselves. So the industry is going to go through a process of transformation. It's going to go through it's going to go through a tough time in terms of transforming itself. But I think this industry is going to come out of it even stronger than what it had before.
Perhaps something that does capture most mind space when we talk about Indian IT is the issue of the H-1B visa. What are you currently seeing in terms of rejection rates, in terms of the time taken for scrutiny? Is that going up significantly? Yeah. I mean, how big a challenge is this today for Indian IT, in the current context?
Yeah. It's an irritant, because the scrutiny is definitely going up. It's becoming a much more cumbersome process, so it's definitely an irritant. But Shireen, I want to put forward some facts which most people are not aware of, right? Of the 65,000 H-1B visas that are given out every year, the Indian companies take less than 12%. To be exact, in 2017, they took 8,468 visas, right? Majority of the visas are going to non-Indian companies, and this is unfortunately a big myth that exists, that all H-1B goes to Indian companies, right? Now, there are two things about this. If you look at the top takers of H-1Bs, these are all the top US tech giants, and they're also the companies that are spending the most on R&D. And what does it tell you? It tells you the importance of talent. It tells you that the US does have a talent deficit. There is the latest figure is around 2.5 to 3 million more jobs than people. I'm talking about IT, IT and technology jobs than skilled people. It also tells you that India has a talent surplus, and that's a huge strength in today's world, right? So when it comes to the IT companies, if you look at the visa intake in 2015 and you look at 2017, it went down 43%, and it went down by choice. It's because we are changing business models
and hiring more locally.
We are hiring more locally because, as I said earlier, the new world is about co-creation. The old world was about writing a code and scaling it, right? Which gave us the cost efficiencies. The deals, if you look at today's deals, by the way, we talk about growth in spend. You look at the growth in the deal value, 128% up year over year. It's huge. And why? Because it's increasing in complexity. It's end-to-end platforms, right? And to do that, you have to be near your customers, right? Yeah. So, and the wonderful thing about technology is that push comes to shove, it'll allow you to work from wherever you are.
So you won't necessarily need a visa.
In today's world of digital twins and God knows what, you can work from, you can still service the customer from where you are. But the nature of work is changing.
The domestic Indian IT companies versus the global players, as well as the in-house captive centers that have been set up. What are you seeing there? Because they seem to be growing at a faster clip than the domestic IT companies.
It's a great story, right? What we're seeing there is India today is becoming pretty much the preferred location for global captives. And it's being driven by access to talent and access to ecosystem. Now, we cannot take that for granted. We have to continue to strengthen both tremendously, especially the startup ecosystem, and I will talk a bit about that. We have roughly 1,200 odd captives, if I'm not wrong, in India already. Just last year, 40 got added.
Okay.
The interesting thing there, the numbers are great, but the interesting thing is not the numbers. The interesting thing is the work they're doing. So while it started off with resource centers and just back-end support, today you look at it, they're playing a role in market expansion strategies. They're innovation centers. So you see also as the captives grow, you see a growth in design centers, innovation centers, centers of excellence, which is a fascinating story, and a fascinating story for us because it helps us build a much stronger ecosystem in country.
As I said, FY19, the outlook that NASSCOM has put out is better compared to the previous year. The key priorities now, or the key challenges that you're going to be working on?
Talent development. We want to accelerate the pace of talent development in India. One of our flagship initiatives, NASSCOM Future Skills. We're working with both industry and government to train around 2 million IT workforce and 2 million students to be workforce, building the pipeline in the next 4 to 5 years. So this is a critical one for us. And this is training them for the future jobs, not just on the technologies, but training them for the future jobs, right?
All right, we'll take a quick break on that note. All the currency and commodity market action coming up next with Manisha Gupta.